We'd like to thank Mainspring Companies for sponsoring Season 1 of The Next Entrepreneur. Mainspring celebrates the entrepreneurial journey, and we are very grateful for their support.
Two of the biggest reasons for business failure are lack of capital and lack of financial management. And those two things were true when I started my banking career, and they've been true the entire time. And as I sit here today, those are the two big killers: lack of capital, lack of financial management.
Hello, I'm Andrew McClendon, your host of the Next Entrepreneur podcast. I'm here today with our producer, Daniel Sagona, and our guest today is Louis Greenblatt. Louis, welcome to the podcast.
Thanks for having me.
So, Louis, you are the president of Evergreen Working Capital. Your mantra is helping entrepreneurs fund their dreams with affordable, flexible access to capital. So tell us how Evergreen Working Capital does that.
So we provide capital based on a company's accounts receivable. Our clients will go out and do work. Let's say for Exxon, you go perform some service in the plant. Then they send the Exxon an invoice, and then Exxon takes maybe 60 days to pay. So our customer's got to be able to have money, capital, to pay for his labor and his materials, because right when he leaves Exxon, he's got to go to the next job and spend more labor, more materials, over and over. And if you imagine just sending out an invoice every time you finish a job, but you're having to wait on that money and there's no certainty, even if your terms might be net 30 days, Exxon will pay you when they want to pay you. So you have to be able to survive. And that's what we do. So after our client does the work, we buy that invoice from our client, give them the cash immediately. So now you've got cash in your pocket, simulating a cash sale. But really, most commercial business has to be done on a credit basis where you're giving your customer net 30 days to pay or longer. Okay,
so across what industry? So that is factoring.
Yes.
Okay.
The purchase of accounts receivable.
The purchase of accounts receivable. So your customer then ends up, in effect, with early payment on their invoice at some discount for your services.
Right.
But then they're able to grow their business by having access to their capital. Now, the other ways of doing that maybe are through lines of credit with a bank, and you're making draws, but these are businesses maybe that aren't accessing lines of credit?
Maybe they are, but maybe they're growing too fast for the bank's appetite. When you talk about banks, just maybe all lenders look at how much debt you're carrying as a company. So they may extend you credit, but there's going to be a limit somewhere because they're all looking at your ability to repay that debt. So that's the focus of lenders is, I'll lend you this money. When can you pay it back? And I need interest. And so it's all about you being able to repay that debt. So the difference would be if a customer reaches that point and says, the bank says, I can't give you any higher line of credit, and you're still trying to grow, then you've got to find an alternative. You either raise capital or you factor or you find someone else to lend. But usually there's an end to the amount of debt that you can carry.
Right.
And so factoring eliminates that debt.
So if you're a business and you have a good opportunity with a customer, it seems sometimes the bigger the customer, maybe the longer terms they will have. And you know that you can't really wait 60 or 90 days to get paid, but you can't afford to miss this opportunity. So that allows an entrepreneur the opportunity to move forward with the opportunity, knowing that they have options beyond direct payment from their client.
Right. All they have their objective is get the work done.
Yeah.
Finish the sale. And when the sale's finished, they invoice their customer and they can get their cash immediately after that. So that's functionally how it works and why it works.
So as a factoring company, Evergreen Working Capital, you're not as much underwriting than your customer, but rather their customer.
Correct.
So that's interesting. The underwriting process, like may traditionally happen in a typical bank financing, is still happening, but it's just happening with the your customer's customer, right?
That's correct.
Who you're buying that receivable
Right.
from.
And that company is going to pay us directly. So if I buy your invoice from Exxon, we will send a notice to Exxon that says, hey, we're the financial partner of this company, and all payments need to be paid to Evergreen. We have an assignment of the receivables. Make that as pleasant as possible, but that's the transaction. We've bought the invoice, now we are legal owners of it, and we're due the payment, not you. You've been paid by us, so we're the next party to get paid.
Yeah, it's interesting. You can think of factoring maybe to be a service to benefit companies that maybe haven't graduated to the point of having established banking relationships for established lines of credit, but also those that are growing at a speed that maybe they've eclipsed the bank's appetite for a line. That's
Absolutely. So in our business, looking back over the years, fully one half of our client base is what we call startups, which is 0 to 3 years of age. The other half are companies who are older, who just happen to be growing too fast for their bank. So
the other thing I saw that you offer is as business advisors. So can you tell us a little bit about that? I mean, you're beyond, buying receivables. You're advising small businesses and startups.
we do that, and we do that for our clients. We don't do that to the public for a fee.
Right.
When it's not a fee-based service.
Right.
But for our clients, it's very easy for us to assist them with financial management tips. Although our client's financial condition is not critical to whether or not we can do business, what's critical is who they're selling to.
Right.
We still have I'm an ex-banker, and I have a great interest in what their financial condition is, and are they going to be successful or not. And when I see them doing things or having done things which are detrimental to their financial success, I like to point it out. I like to have a conversation. Just, by the way, if you're interested, this is what I see about your company, and here's some tips. So I think it's a valuable part of what we do.
I mean, I think it's very healthy. I mean, I'm a big believer that, banks make good loans based on good deals, right? So I did want to ask you next about what's going on right now in the market. We're in some crazy times, and, I don't think the economy has experienced a breaking to the degree that the COVID-19 situation has impacted the industry and the market. And I wanted to see if you could shed some light on what that means to a company like yours and maybe to your customers or theirs.
So the impact has been tremendous, the shutdown of the economy. Generally speaking, if our clients don't have work to do, and if they're not making sales, then they don't need us. Our business is down well beyond 50% as a result of this shutdown. We do have a concentration in oil and gas. We always have, based on our South Louisiana presence. So more than half of our business is in oil and gas. That's been hit very, very badly from a supply standpoint and a price standpoint. And they were experiencing trouble in that industry prior to the COVID virus. So it's really a double whammy for them. But so basically, our type of funding, which is funding your sales, we're buying your invoices to help you grow.
Right.
That whole concept kind of becomes moot. It's a moot point of what we do if you don't have sales. So if you don't have sales, you can't get money from us because that's our basis.
Right.
So it's been really tough, and basically it seems like the government response to the virus is worse than the virus, and that's continuing. So we're struggling with that, and just looking for silver lining, looking to expand our business. We are picking up new clients in different industries, kind of outside of oil and gas, so that's helpful to us right now. So there are parts of the economy which are doing okay, and we're just having to pivot into those directions.
Yeah, it's really been startling. But like you say, the double whammy on the oil and the COVID, right? So,
right.
like you mentioned, you already had this oil situation going on in which the price of oil was, being impacted.
Really an oversupply situation.
Right. And in between the Saudis and Russia, right, they're fighting each other, and no one was going to cut back on supply,
Right.
and therefore prices plummeted. And then you have the COVID situation, the breaking on the economy, and then demand
Right.
fell out of the bottom. So that's been really, really tough. But we do see oil prices rebounding some significantly from their
Right.
negative position.
Right.
So
It's going to get better. We just don't know exactly when.
yeah, it is, but it's tough, when businesses are allowed to open at 25% and then 50 and 75.
Right.
Some of these restaurants and other businesses, and
Right. They're not geared to run at 50% capacity.
I mean, any business at 50%, a restaurant in particular, is the numbers don't work,
Right.
right? But hopefully some of the quantitative easing and government programs will help, and I just hope that business can get back to normal sooner than later. But it has definitely been devastating.
Well, I think the government programs are okay in the very short run as an assist, but you very quickly have to get back to a normal economy where you open the economy, government assistance stops, and let things happen as they happen in a free market. That's the only way that's the only survivable plan. That's the only sustainable plan, is a normal economy.
Absolutely.
So as the new programs roll out, the corporate welfare, Main Street lending program is the next thing. I see those things as prolonging the event, and it's really it's a mess. So we're praying and hoping for a open economy across the board.
Right. So I wanted to drop back a bit and talk about how you got your start. You were a finance guy from the beginning, right?
Right.
And tell us how you went from college straight into the finance and banking business.
Right.
Tell
So I didn't know that I wanted to be a banker. That was never my objective. I grew up in an entrepreneurial household, and so I didn't understand it, but I saw and heard issues of finance come up. My dad was a contractor, and so there was always issues with funding in that industry, and so I would just hear the stories about that. And my grandfather was in the grocery business, and that seemed to be a solid business because it's cash. So the more your sales go up, the more your cash balances go up. So that seemed like a good industry. But anyway, just growing up in that entrepreneurial environment made me think, I think I want to work for myself one day. But then, how do you make that happen?
Oh, yeah.
And I made things complicated by falling in love with my high school sweetheart or getting married to my high school sweetheart, I should say, during college. And so when you have that new priority of, okay, now we're married, we have to finish our degree, and you go to work because you need to earn a paycheck.
Yeah.
There's no dilly-dallying around with trying to start a business. So when I got near the end of my finance degree, I had to start saying, okay, what am I going to do? And it looked like the options were banking or security sales. I was interested in both those, except I didn't really want to make it purely based on selling securities. So I thought banking sounded safer and interesting, and so I went into that, and it was a great start, as it turns out. And that was in the middle 80s. So that started off in an oil bust, which is just crazy.
Right.
And I'll never forget. So when I graduated from college, Baton Rouge, all the banks in Baton Rouge were not hiring. There was a hiring freeze everywhere because the economy was on the rocks.
Right.
And I found one bank, and it was Guaranty Bank in Lafayette, Louisiana, right in the oil center of the state. They were blowing and going. They didn't know there was an oil bust. And so there was no hiring freeze. So I interviewed, and there was a bunch of people and competing for the job, and I got selected for the job, but the salary was $18,000, and I thought, wow, I thought I was going to be like in the mid-20s, but one of my choices, I'll have to take it. And 6 months after I was there, they realized they were in an oil crisis, and we had a 10% pay cut.
Oh,
so I thought, okay, 6 months in, now I'm making 16.4 instead of 18. So it was a bad financial start like that. But anyway, so I stuck with it, of course, and worked hard and made my way up. And so it worked out. It was just a funny start.
Yeah. So I graduated about the same time in construction. And, there used to be companies that would come to college and, have a employment day or whatever you
Right.
call it, a job fair. And 0 companies came that year.
Ooh.
And so I ended up working as a laborer for a construction company, and I was making $7 an hour with a degree in construction. So you had me beat by a couple of $1,000 a year. So I'm envious, but
It makes you appreciate, that paycheck.
oh yeah.
Work hard.
So but when you get engaged, things get real.
Yeah, it got real really fast.
Yeah.
All of a sudden, I started doing better in school, and so it's funny.
Someone we know got engaged last weekend.
Oh, okay. Congratulations.
Our producer, Daniel. And I told him, I was like, man, the next 10 years are going to be awesome, man. So many amazing things happen in life in those 10 years.
It just all becomes really real.
Yeah. And it's fantastic, man. It's just fantastic.
Yep.
So, did your gig at Guarantee last for a while? I mean, did you get through the...
So my wife was still in college, and she, in fact, dropped out whenever we were in college for my last 2 years. So she was working for an insurance company here in Baton Rouge, and I was driving to Lafayette every day. So for 18 months, I made the daily drive.
Wow.
And fortunately, a couple months into that, I realized there was someone else doing that. A friend of mine, a guy who became my friend, Mike Hefner. So he and I made that drive together. He was working in special assets, which was the problem loans in the bank.
He was busy.
So
at that
yeah,
time.
he and I drove every day, and that was kind of fun, except it got a little old. And I found that Louisiana National Bank in Baton Rouge had begun hiring again. And so I made the arrangement to move to, and by the way, it was in the same banking group. So I was a banking group called Premier Bank was formed, and they started to merge the largest banks in all the cities of the state. So Guaranty Bank in Lafayette merged with Louisiana National Bank, and then on down the list of the other banks. So it made the transition pretty easy.
No, that was Chuck McCoy.
Yes.
That was heading up all that acquisition.
Yes. And Chuck McCoy, Lee Griffin, those are the guys back then that ran the bank.
And did Lee follow Chuck in leadership?
Yes, I do believe.
Yeah.
Yep.
So you ended up working for Lee.
Right.
Then. So how long were you with LNB or Premier?
12 years total.
Oh, wow.
That includes Guaranty Bank.
Okay. And so at some point along the way, you're now thinking about Louis Greenblatt going into business for himself. To walk us through when that happened.
Well, the funny thing was, the whole time I was in banking, I was thinking, one day I'm going to have my own business. I still had that thought. But the cool thing was I spent the first 18 months doing credit training and manager training, and then I got into lending. So the greatest thing I ever did for my career was become a business lender, and I got to see the inside of so many businesses, both the ones that we actually loaned money to and the ones that we weren't able to loan money to. I still started a relationship with that person and got to see their business and understand it. So over the course of the next 9 years, when I was a lender, just developed good relationships and a great understanding of how businesses work. And this, I'm never stopped being amazed by the different ways that people make a living. So many types of businesses, so many niches. Just find it to be fascinating.
I find it completely fascinating. The whole banking business and how you get to see what you just said, how different businesses and industries work and how people make money. And
Right.
It's utterly fascinating. But the other thing that intrigues me is the creativity that, the commercial lenders in particular have in making deals work.
Right.
Like there's seemingly endless ways of skinning that cat. And,
But they are bound by the
Sure,
parameters
sure.
of the bank's loan policy.
Yeah,
So
absolutely.
loan policy sets the tone, and you can be creative as long as you're still inside the box. And so what I learned was, all along as I was gaining experience being a lender, I kept thinking my exit out of banking is going to be, I'm going to become a CFO for one of these customers of mine.
I see.
So I thought being a financial consultant might be my way to become an entrepreneur. So I carried that thought for a while, and then I discovered asset-based lending, and I kind of fell in love with that because it expanded my box. So regular commercial lending has limitations on how much debt you can have or lend to a company. But if you're doing asset-based lending, which is increased monitoring, asset-based lending is lending on accounts receivable and inventory with a line of credit, a revolving line of credit.
Right.
So if you're monitoring those assets, the receivables and the inventory under close watch, the bank will basically allow you to lend to companies with higher leverage or higher levels of debt because you're putting in more controls that monitor your collateral and control your collateral. So you get to do more if you're an asset-based lender than if you're a straight commercial lender. So I love that. Did that for a couple of years, but we still had a lot of stuff, more stuff outside the box than inside the box. So
By that you mean more things that you were having to say no to?
correct.
Yeah.
We'd have to tell entrepreneurs, no, we can't do your loan because you don't have enough capital or you're not profitable enough. And it's one of the worst things a bank lender has to do is to tell a customer, I can't help you because of whatever. So I always wanted the next, how can I help this guy? And I learned about factoring accounts receivable. And so factoring kind of starts where asset-based lending ends. So if you think about it, again, kind of like a box, this is the deals that we can do. And asset-based lending expanded my box, but I still had these over here that I couldn't do. So I would refer those out to factoring companies, local factoring companies.
Right.
And so that would allow that company to keep growing based on their accounts receivable.
Right.
And so I thought we need to do that at Premier Bank. That needs to be right down the hall from me. Factoring. So if I can't do it, I'm going to walk it down here. So we kind of studied it. We came up with a plan. We pitched it to I pitched it to my boss. He said, sounds great to me. My boss was Bob Brooks at the time. And not the real estate Bob Brooks that everyone knows locally, but
Right.
Bob Brooks, the banker. So he liked it. We went and made the pitch to Lee Griffin, who was our CEO. And Lee thought it sounded like a good idea. And he said, however, we're owned by we're kind of controlled out of Columbus, Ohio now. We had just become Bank One. And so we got a conference call to Columbus, Ohio, the president up there. And we made the little pitch, and he's the guy, we couldn't see the banker. There was no Zoom back then. So we just heard the guy say, that sounds interesting, but we don't do factoring anywhere in the country, and we're not going to start doing it in Baton Rouge, Louisiana. So next. So we got shot down immediately. And so when I walked out of the meeting, my boss turned to me and he said, "You still want to do this?" I said, "Yeah, I want to do it." He said, "Why don't you write us a business plan and we'll go do it." I thought, well, that sounds awesome, and this might be my ticket to becoming an entrepreneur. So 6 months later, I presented a plan to my boss and said, "Here's the deal," and he accepted it. And he had oil and gas properties, which we use for collateral. So we had to have a collateral base to be able to borrow money to be able to start our business. So we went into Lee Griffin's office. We each had a letter of resignation, turned it into Lee. He fell back in his chair. He couldn't believe we were going to end our banking careers to go start a factoring company. But we did it, and very happy we did.
That's cool. Let's take a pause right there, get in a word from our sponsor, and we'll be right back. MBD Maintenance is a proud sponsor for the Next Entrepreneur podcast, and we greatly appreciate their support. MBD Maintenance is a commercial building and maintenance contractor. They will build your commercial building, maintain it. They do additions, remodeling, tenant improvements. If you need MBD Maintenance for your commercial building needs, you can find them online at mbdmaintenance.com. And we are back with Louis Greenblatt, president of Evergreen Working Capital. So you've handed in your letter of resignation, you and Bob, the banker, Bob
Yep.
Brooks, and you start your business. And it's Brooks Greenblatt.
Correct.
So walk us through how you start a factoring company. Your business model is to buy receivables. And so you have to have capital and sources of capital meaningfully enough to make the numbers work. So walk us through how you do that.
So as I mentioned, my partner outside of banking owned some oil and gas properties. So he was sort of an entrepreneur already. He got these oil and gas properties out of a bankruptcy. He came from Continental Bank in Illinois, and Continental Bank had a big failure as a bank, and there were a lot of customers of theirs were in bankruptcy, and he got together with some partners, bought assets out of a bankruptcy. So he had oil and gas properties, and that's worth money based on the oil and gas that's in the ground. So we went to a local bank, and Bob pledged his oil and gas properties, and we got, I think, a $2 million line of credit.
Oh, wow.
And we thought this would be a good start. So Bob and I got started up. We were on 3rd Street. We rented a space on 3rd Street in an old building. And so I started calling on companies, and it was straight out of the ground. We had no, and we didn't buy any business. We had to go out and find it.
Right.
And it was so funny. But the very first customer ever, it was a company in New Orleans. They were in the hydraulic steering business or hydraulic business. They would rebuild the hydraulic systems of boats that went up and down the river. Wow. And that's all they did. It was an old company, but they had gotten out of favor with their bank because of some losses. So I go down there and make my pitch, and I think I know what I'm talking about. I've done a lot of study on it, but haven't done factoring yet ever in my life. And so we get down there, and I have the long meeting with the guy, and he's jovial, and he's accepting of what we talk about, how we're going to do our business. And so then when I'm leaving, actually, I guess we were going to lunch. We were walking across this hot parking lot. It was limestone, and it was just radiating heat. And we were having light talking, so he just stopped. He said, "So Louis," he said, "how many customers do you have?" and I said, "Counting you?" One. He fell out laughing. I just thought, I think I'm going to lose this guy, but I didn't. So it was just a very lighthearted moment.
Yeah, it's like catch-22. How do you get started?
How do you get your first one? So you can say, "I got this guy. You can call him."
And so, did you nab that client? Did he become client number one?
Oh yes.
Yeah.
He was a client for a good number of years.
Oh, that's great. And so you're pounding the pavement. I mean, right. You're having to make deals. You're going finding companies, and so I imagine the company that could benefit from factoring was pretty happy to run across you. I mean, if
Right,
they had
right.
either run out of favor with their bank, as you said,
or never qualified for a bank to begin with.
yeah,
You know, so
or max their capacity at a bank.
they've all been told no by multiple banks by the
Right.
time they come to us. And, unfortunately, most people don't even know factoring exists as an option. And so they don't know what to ask for. And, they're kind of dependent on their centers of influence, like bankers and attorneys and CPAs, possibly knowing about factoring and saying, hey, why don't you try this? So, and therefore our mission became, let's preach this gospel to the bankers and let them know here's an alternative if you can't help a company with a line of credit. And that's how we built our business. Being involved in being a member of a statewide banking organization, I had contacts across the state. And so I just used all my contacts. I went around calling on people that I used to work with.
Right.
And that's how we really got started.
So you have to educate your customers into what factoring is, but you also have to educate their customers, right? I mean, so when you send out that first letter to, your hydraulic client's customer, they have to get that and go, I'm comfortable with this transaction. So you're obviously on the phone with them as well and walking them through it. So
in most cases, they've heard of factoring.
Okay.
The bigger the company is, the more they probably have some of their suppliers
Right.
who factor their invoices.
Yeah.
Every now and then, we'll get a contact, say, hey, who are you? What are you doing? Explain this to me. Because we're telling them we're the financial partner, but the letter is signed by us and our client. So they see that our client is part of this transaction.
Sure.
So they'll either contact our client if they have a question about this, or they'll contact us. But in large part, 80% of the time, there's no contact. They just go, oh, okay, we got to pay Evergreen now, and they build it into their system.
So at what point did Brooks Greenblatt become profitable? I mean, how far in were you?
I think it took us 3 years to build up enough size, but it was right about that time that, actually, in our fourth year, Bob Brooks came to me and said, Louis, I need you to buy me out because I have to go spend money on my oil and gas properties because they're going to decline in value if we don't go redo some wells. And I was shocked. And he gave me a letter and then kind of told me verbally that he was ready to be bought out. And so I was just blown away. I was caught flat-footed on that subject, and so I had to sort of go out and try to hurry up and find either some equity partners or find a lender. I ended up talking to 3 lenders, and none of them wanted to lend me money, but all of them wanted to buy my company. And I'm like, damn, I don't want to sell. I mean, I'm losing my opportunity to be an entrepreneur if I have to sell the company. So, but I ended up saying, well, Bob is ready to go, and so I kind of had a short time frame. So I ended up negotiating with ultimately Fidelity Bank. Mike Anderson was a president of Source Bidco, which was a subsidiary of Fidelity Bank. Mike was my first contact. He and I talked about it. He introduced me to the president of the bank, and we began negotiating, Bob and I and the president of the bank and the CEO of the bank. And so we got that deal done in pretty short order, and the bank wanted me to keep running the factoring company for them. So I went from being half owner of my startup factoring company to 0% owner. I was just an employee of the bank running that division. And it wasn't long before they kind of recognized that I had banking skills that they needed in the bank. So I started kind of doing both things.
Oh, wow.
Yeah.
So let me back up a little bit. In those 3 years when you're building Brooks Greenblatt and to get to the point of profitability, how did that feel for you being an entrepreneur or something that you're building versus having come from, the banking employee perspective?
So
I mean,
it was
it a lot of pressure, a lot of, sense of a lot of risk? Did you thrive on it? Did you enjoy it? Was it sleepless nights, a combination of?
So the thing is, I'm going to say a quasi entrepreneur because I was really using Bob Brooks's money. I didn't have to commit money. I had to commit my labor.
Right.
And so I kind of earned my percentage ownership in the company. Bob was sort of just a caretaker. I was the factoring guy.
Right.
He was the investor. We shared office space, but he kind of let me do this pretty much on my own. I mean, he was advising whenever he thought he needed to, or if I had a question about something. But so I was the guy. I felt a lot of pressure, no doubt. And if it weren't for the steady progress that we were making to eventually become profitable, it would have been too daunting of a task. And by the way, I've got little kids at home.
Right.
My wife's saying, everything's going to be okay, right, honey? Yes, baby, it's going to be okay. So had to constantly reassure her, reassure my investor that we're going to make this work. So it was a lot of pressure. But again, the successes, every time I had a success, it just propelled me forward. And I kept seeing the need in the market. So I knew it was out there. I just knew I had to find these companies who needed us.
Well, look, all entrepreneurs have to find capital to start in some level,
Right.
From very small to significant. And Bob Brooks was your ticket to capital. And so that seems completely entrepreneurial to me. And had you been given a few more years, then you maybe could have gotten profitability to the point where you, in fact, could have bought him out, or maybe had the time to find another partner.
Right.
All those entrepreneurial options. But in this instance, because of the timing, a sale was the way to address that situation.
But we had really just begun being profitable, but we were just propelled. So once the sale happened, our success just kept building, and we grew really rapidly after that.
Under your leadership at Fidelity.
Yes.
Yeah.
So he stepped out at the wrong time, but he had to. I mean, there was a reason why he did it. He wasn't really bailing on me, so to speak. But it was just unfortunate that he didn't get to enjoy that success. We gave that to the bank, essentially, or sold it to the bank. So,
yeah, very cool. And so that was in 2001 that the sale to Fidelity took place. And then you continued to grow that for a number of years under Fidelity, right?
Correct. And I wanted, but my plan was always to get out from under the bank. So I wanted to buy the company back. I let the bank know that 2 years in, and they indicated that they would be willing to sell it back to me, but they wanted me to help them with the bank because the bank had a lot of financial difficulties. The bank went through a lot of presidents over the course of time that I was there. They were going on about a new president every year or two. So there were some serious problems in the bank. And so I negotiated a deal with the bank to get paid more for what I was doing for Brooks Greenblatt in exchange for helping them with the bank, helping them from a management standpoint. But when it came to the end, so I stayed there for a total of 6 years. When it got to the end, I was actually the CEO of the bank I guess I was the president of the bank for the last year and a half that I was there. But I hired a replacement for me, and so I was like, okay, bank, I'm ready to go. So then we had a surprise disagreement on the value of the company. We had grown to a pretty good size by then, and we were far apart. We were a couple of $1 million apart on a sale price.
Right.
So, me being cavalier and thinking I'm bulletproof and I'm an entrepreneur, I just said, fine, keep it. I didn't negotiate very long. I just said, we're so far apart, this isn't going to work. And I just said, I can start over if I need to. And that was a rough story to tell my wife. We're starting over again. But this time, so I turned in my resignation, left the bank, started working on a business plan. And I thought, this time I'm not going to raise capital from one person. I'm going to raise capital from 10 people.
Oh, wow.
My goal was to raise $1.25 million to $1.5 million of equity, and then get a line of credit from a bank on top of that to be able to grow our business and expand. So I didn't have $1 million, and so I was going to have investors, and I was willing to sell ownership clearly to get that accomplished. So that's what we did, and I guess I spent the summer of 2007 building the plan. I spent the fall talking to investors, and we were in business at the end of 2007. And I guess you could say we really opened our doors on January 1st, 2008.
So that's Evergreen Working
Yep.
Capital.
Yep.
So essentially, you're the managing partner, or what's your title there?
Yes, I mean, that's correct. I'm the president of, that's the title, but I am the managing partner in the company.
And so you're now the sole entrepreneur that you wanted to be.
Right.
And so it's 2007. And right around the corner is looming another
2008.
Yeah. Another looming economic situation.
Right.
And so tell us about the start of Evergreen.
I would say it was definitely easier to start Evergreen than it was Brooks Greenblatt because we knew, I knew what I was doing in the factoring business.
Right.
And we knew how to do it. And so I was much more comfortable. I think we became profitable, and it still took a couple of years because you have to scale it up to a point where we're making on average 2.5% of the that's the discount on the invoice. So that's our revenue.
Right.
So we buy a $1,000 invoice. You're talking about $25 that we're going to earn on that.
Right.
Not very much money.
Right.
So you have to have volume, and it takes time to build volume. But the success path was just easier. Never easy, but good because we had to start out of the ground. We didn't buy any company. We didn't buy any business. We couldn't steal any business from our old company because I had a non-compete.
Right.
So I had to actually start the company outside of this region. I had to my initial office was in Houma.
Oh, really?
Because of the non-compete. So that lasted 18 months, and after 18 months, I moved the office back to Baton Rouge.
So being in Houma, you were focusing mainly on oil and gas services?
Right.
Yeah.
And marine.
Yeah. So, and then how did the 2008, 2011 recession impact you?
It didn't really hurt us because what happens in recessions is banks can get conservative, and the more conservative banks get, the more our market expands.
Right.
You could kind of collectively say that our market, the market for factoring services, is made up of it's what's outside of all the banks' cumulative credit policies. So whatever the credit policy is, that kind of sets the standard for what needs to be factored or what can be bankable. And again, in a recession or in bad times, banks get conservative, so their box gets smaller and our pool gets bigger.
So how do you compare 2008 to 2020 as it relates to the breaking on the economy?
I would say it's night and day difference. So the financial markets really the financial market disruption that happened in the 2008-2009 timeframe was mostly psychological, and I mean it was real, but it didn't stop business from happening. This virus has stopped business from happening, and so rather than just being in a recession, we're in a depression where people shut their doors or greatly reduce their sales. So now there's been nothing like this, and I don't know how many oil cycles we've been through where we've had to fight through this. Like we said, I started my banking career in the oil bust of the 1980s. That wasn't nearly as bad as what this is. So there's no comparison to 2020.
So I tend to agree with you on that, but I'm a little mystified with the stock market right now and how it's at the level that it is based on what I'm seeing and what I forecast in my mind of the impact on businesses throughout the next year or two. Any thoughts on that? I mean, it seems like there's a bit of a disconnect.
It does, and theoretically, the market should price in all the uncertainties that are out there. And I think that the bottom line is things are going to get better, and they're looking down the road, I believe, and just saying that certainly by the end of this year, business will be somewhat back to normal, and the market's really funny because they say they have long-term views, but sometimes someone sneezes and the market crashed today.
Right.
So there's all kinds of short-term knee-jerk reactions, but I think in large part, everyone knows our economy didn't go away. The oil and gas market didn't go away. The world is still dependent on oil and gas. It's still the cheapest source of energy and the most abundant, and so it's going to come back. The difficulty is, and our bad feeling, if you want to look at the bad side when you wake up today, the negative feeling is just you can't ever tell when it's going to get better. And every downturn I've been in, people continue to try to predict when is it going to be better, and it always looks black. You can't see, right. You can't predict oil's going to do this tomorrow. But once it comes out, everyone says, "Oh, I know it's going to get better."
Yeah.
But when you're in it, it looks like this is the worst thing ever. So
it's just interesting, like as you travel through airports, which I've resumed doing the last few weeks, and thriving what would otherwise have been thriving airports just completely shut down. A coffee shop open here or there, and I mean,
that's scary looking.
It's scary. It's compact. All these businesses side by side, and they're all shut down. And all
right.
those employees and all those customers, there's no money being spent there. It's just devastating to see. So there's, and of course that's happening all across America on Main Street, but you get a real interesting perspective on it when you're in an airport.
Right.
Let us take a break right there, Louis, and we'll be right back. GearTrain is a national testing, inspection, and audit company that works in the e-commerce fulfillment industry. So these guys provide the quarterly and annual inspections, preventive maintenance inspections, and they do testing and audits of conveyor systems and automated equipment and big distribution facilities. They support the entrepreneur's journey, and we're proud to have them as a sponsor. You can find GearTrain online at GearTrainPerforms.com. And we are back with Louis Greenblatt, the president of Evergreen Working Capital. And so, Louis, you've got Evergreen going now. You've been working in Houma for 18 months to address your non-compete.
Right.
Then you're back in Baton Rouge after that, right? So you've been in Evergreen now for 13 years?
We're in our 13th year, yes.
And so it seems, so your approach to starting Evergreen, you mentioned, was to sell equity, right?
Right.
So you got your 10 or 12 partners?
Right.
Right. And have they remained in the whole time?
Yes.
That's amazing.
We bought one partner out because of a death.
Yeah.
But other than that, everyone's still here.
That's amazing.
Yeah. So we start off with that group of investors and a $4 million line of credit. We were able to get a $4 million credit because we were adequately capitalized, and I had the experience level that gave our bank comfort level to lend to us. And so we grew that relationship. I'm still with the same bank now. Still have the same capital base now. But for us, I mean, just based on my background, I understood the value of capitalization. And so that's the biggest mistake that I see owners make or entrepreneurs make, is starting off their business without enough of a capital base. And sometimes they simply underestimate what they're going to need. And they don't realize that the more success you have, the more financial burden there is in the company. If your assets are growing, which that happens when you grow sales, you have to keep supporting those assets with debt or equity. Every time you raise $1 of assets, it's debt or equity has to support that. And debt only goes so far. I think entrepreneurs want to borrow their way to success, and you can only do that so far.
Sure.
Then you have to have the capital answer. So
Yeah, it's really interesting when I hear you explain how you started Evergreen. Is you'd had that previous experience of having one partner.
Right.
You weren't going to experience that again, so you ended
Exactly.
up with 12.
Exactly.
Right?
So I thought I can handle some turnover.
Yeah, exactly. Yeah,
But it didn't have any.
yeah, and then you also knew how much capital you needed, right?
Right.
And what kind of line of credit you needed to be successful. And of course, that's from years in business and learning that. But I mean, that's pretty impressive to have figured out that formula, and here it is, 12 or 13 years later, and it's still sustaining.
Right.
So tell me, Louis, what is your vision for Evergreen Working Capital?
Well, so Evergreen primarily does one thing, and that is factoring.
Right.
And so it's a huge deal for companies to be able to get cash for their receivables, but there's more that they need. And so we do one other thing right now called purchase order finance. So if a company gets that order, I keep using Exxon because everybody knows Exxon.
Right.
So if Exxon says, I need 10 generators, and my customer says, we can do that, and then he turns around and says, how are we going to do that? Because I don't have the credit to go buy those 10 generators, which cost $100,000. So if they come to us with this dilemma, they say, we have a PO from Exxon. It's to buy these generators. We need money to buy it. So we'll evaluate the PO, figure out what has to happen, and we will fund the purchase of those generators. And so we'll write the check or send the wire to that generator sales company, and our client either receives it or has a direct shipment to Exxon. And whenever they make the sale, they invoice it. They turn around and factor that invoice with us. First thing we do with those proceeds of the purchase of that receivable is we pay off our PO funding. So let's say it costs $50,000.
Right.
So we pay ourselves back for the $50,000 advance, and then our customer gets the balance.
Right.
So we're making that sale happen by being involved on the front end with PO finance. But other things are not so clean cut and able to be accomplished like that. So there's inventory finance. There is a work in process that needs to be funded. So I really want to try to find a way to bring capital to these small companies who may not be attractive enough yet in their stage that they're in, or their industry may not be attractive enough to venture capital or to angels. But I want to bring some type of asset-based capital. You could say that buying invoices is asset-based because it's right. We're buying that accounts receivable, which is an asset. But these other assets are even somewhat less tangible and harder to get your hands around. Work in process is a nebulous thing.
Right.
It's not worth anything until it's finished, so that's a hard thing to manage, or hard thing to count on for collateral value. Inventory is hard to count on for collateral value because if when you have it as collateral, if you're honest with yourself, you say, what collateral value does this have? If my customer can't sell it to pay me back, how am I going to sell it to get my money back?
Right.
So it's a catch-22 there, but I believe that we can formulate a capital process where we could provide capital for those assets and provide enough management in there, enough monitoring to where we can make that worthwhile for us and beneficial to our customer, to where they don't have to sell real equity in their company to accomplish what they're trying to accomplish for their growth. So we're working on a couple of capital ideas like that. Again, there's an aversion for entrepreneurs to sell ownership in their companies. They don't want to give up their baby. They've worked hard to get wherever they are. But then also capital is hard to get. So if you might say, hey, I'm willing to sell, but no one wants to buy it because the prospects for your company don't look attractive to that investor. So it is hard to raise capital. So I want to continue to do more to help companies be successful. So we're thinking about all kinds of ways.
So how are you getting your message out? How are you marketing? What particular types of media are you using for Evergreen?
We'll publish articles, go through the social media thing. But our biggest source of business is bankers that we know. So we continue to call on bankers and get a large part of our referrals from bankers, but also other professionals who know what we do. And we just have to call on them and say, hey, don't forget us over here if you have somebody that with these sorts of needs. If basically someone who's turned down at their bank for a line of credit when they're trying to grow their company, we want to talk to that business owner to see, are we a fit?
Yeah,
can we help them?
That's great.
But I like the social media thing. We're kind of new in that,
Right.
Putting our message out there, and I think over time that will bear some fruit.
Yeah, very cool. So I just wanted to wrap up by talking about finance options for startups or young entrepreneurs, right? So I kind of think of, the very first thing. Of course, it depends on what level of startup we're talking about, but for many small entrepreneurs, it's friends and family is where their first round of funding would come from. But that will only get you so far, right? And so I kind of think another viable option beyond that is equity partners, much like you did. But it's that pro and con thing, do like you say, do they want to sell part of their baby? And I think there's instances you were touching on there where, yes, it's hard to do, but it could be the accelerant that would get them much further down the road, much faster.
Right.
And then, all of those are happening maybe before they're ready for a bank, right?
Right.
I mean, a bank's lending companies money to companies that are in a strong enough position to pay them back. They have the adequate collateral. But for many startups, they're not there yet.
Right.
Right. So, there's all sorts of different finance options out there, and
So some of the bank lending that does occur at the startup level involves the individual's personal credit and personal assets. So, if you have equity in your house, the banks are happy to give you a home equity loan, and a lot of companies start off that way. Or your aunt's piece of real estate that you can mortgage. The bank wants security. They want to know, how am I going to get paid back if you can't do it? So their collateral is high on their list. Not everyone has that, but people do use those avenues to get bank financing. Because in the beginning, the bank can't rely on whatever your business plan is. That's not what they can count on to get repaid. They need to have something very solid as a secondary source of repayment if your business model doesn't work. So, yes, it's the friends and family, and usually that's in the form of loans and not real equity. But also, using the resources of the state in terms of Louisiana Economic Development Department, LED's got good programs and can point you in the right directions. Chambers of Commerce can point you in the direction of capital. But again, you have to, whatever you're doing has to be interesting enough and profitable enough on a projected basis to attract capital. Technology is the most interesting thing out there. Everyone wants something that's ultra scalable and just potential through the roof, and that's the technology stuff. The regular blue collar businesses out there, machine shops and fab shops, that stuff doesn't attract much capital, or it's not very attractive unless it's just some angle, some niche that just gives you a competitive advantage. You say, this is why we're going to be successful starting a fab shop today, when there's 1,000 of those shops out there, many of whom don't make it because they don't have enough volume. So you have to have a niche. There has to be a reason for you to go into business. It can't just be, I want to be my own boss. You have to have a viable business idea. And a lot of businesses don't have that.
Yeah.
They think they do, and they have the want to, but whatever it is that they're doing might not be really that economically sustainable. So I would say get advice from a financial advisor. I think two of the biggest reasons for business failure are lack of capital and lack of financial management. And those two things were true when I started my banking career, and they've been true the entire time. And as I sit here today, those are the two big killers: lack of capital, lack of financial management. And if you have financial management, you have you probably have more resources, because now you've got at least a professional helping you understand what you have to sell, right, and help you present yourself to either banks or to the investment community. So having a good CFO, and I'm talking about part-time, fractional CFO, that's extremely valuable. But people don't want to spend money on accounting and finance whenever they're in the early years. They don't see the value. But I can tell you there's value in that.
Yeah, absolutely. Well, Louis, thank you so much for being here and shedding light on factoring. And I do think it's something that a lot of people are still trying to figure out, and
right.
I appreciate that.
Andrew, thanks for having me.
Yeah, man, it was awesome. Thank you, sir. Really enjoyed that conversation with Louis Greenblatt with Evergreen Working Capital. Man, super intelligent guy, very experienced, very driven, very adaptive. He's been through a lot in business. He's a fantastic entrepreneur. 2 business startups, a business sale, ups and downs of economies, and he is surviving. I was really pleased to learn as much as I did about factoring from Louis today, and I encourage you to check out his website, evergreenwc.com. Answers a lot of the questions about factoring. It's a beautiful website, and they have a case study. You can also find Louis on Facebook at Evergreen Working Capital. We really enjoyed his time here today, and we hope you did as well. Thank you for listening to the Next Entrepreneur podcast. We'd like to thank our title sponsor, Mainspring Companies. It can be reached online at mainspringcompanies.com. If you have any questions or comments, you can reach us at ask@nxtentrepreneur.com. You can subscribe to the Next Entrepreneur podcast on Apple Music, Spotify, Stitcher, or iHeartRadio. You can help support our podcasts by leaving a review on Apple Music. You can follow us on Facebook or subscribe to our YouTube channel. Please share this episode with your family and friends. The Next Entrepreneur is produced by Propel Productions. They can be reached at propelyourstory.com. Today's episode was produced by Daniel Sagona.